My fellow Rezolvians, welcome back to the channel. If this is your first time here, what we're covering in today's episode is Rezolve AI. Rezolve AI is the most undervalued AI stock on the stock market today. If you want to take advantage of a multi-hundred plus billion-dollar industry, we're talking 500 plus billion total addressable market here, in a company less than $2 billion that is growing at hundreds of percents with partnerships with Google, Microsoft, Tether, founder, CEO with over $200 million in cash, making incredible acquisitions recently, that is. Well, that's Rezolve in a nutshell. Agentic AI commerce with checkout features and grand endeavors and prospects in the crypto market. That's Rezolve. Now, in today's episode, we're gonna give you a bit of an update today. We're going to be going over again today what happened today. Rezolve actually outperformed a bit, and I want to talk about that. We're going to look at the short position in the company, the option activity in the company. There is an article I found on Google that says Rezolve is actually about $2 undervalued based on a DCF model. Just hopefully you guys should understand how crazy that is. In this market, an AI stock like Rezolve is considered undervalued on a discounted cash flow model. Most AI stocks are trading like 10 times the valuation of Rezolve. That's how crazy undervalued this stock is. Now, in today's video, I'm also going to give you an update to where I think the stock could be going, what could be coming next, my revised targets for year end, and where I think the stock is going to be, as well as 2026. So we have a lot of work to get into here in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. If you guys want to come identify opportunities early, like we are and we do, check that link out down below in the description of today's episode. The trading community portfolio year to date is up 179%. The highest so far it was October 8th. It was up about 220% on October 8th year to date. In this video, I will share my position in Rezolve as well. For anyone that does not know, I have well over 6 figures invested in this stock alone. So let's start with this article. It says Rezolve AI evaluating the valuation after SmartPay and Subsquid acquisitions transform agentic commerce platform. The company recently bought SmartPay and Subsquid for $10 million in cash and about 1 million shares of stock, which equaled about $16 million or so. So that was a big sigh of relief because, people were like, oh my gosh, did they overpay? They just recently raised about $200 million in capital in a private placement. That's, it made people nervous. And then the company came out after I said, hey, the markets need a little bit of clarity on these acquisitions. And the company put out a press release disclosing what they paid for these companies. Now, check this out. Price to book of negative 115x. Is it justified? It says the SWS DCF model gives Rezolve AI a fair value estimate of $7.76 at the last close price of $5.46. It says shares are trading at a substantial discount. Our DCF approach estimates the company's worth by forecasting future cash flows and discounting them to the present, capturing both growth prospects and potential risks. Because Rezolve AI is in an early, high growth phase and currently unprofitable, earnings multiples do not provide reliable signals. This makes DCF a key lens for valuation. The model considers projections for both near-term expansion and long-term business dynamics, which is crucial in evaluating ambitious, fast-evolving tech companies. So the result? Look at this. DCF fair value, $7.76. The stock is considered undervalued on a DCF model. If you guys have been in the markets for a while, you know how crazy that sounds. On a DCF model, for an AI company in a total addressable market like Rezolve's, hundreds of billions of dollars, trillions of dollars, growing at hundreds of percents. The fact of the matter is, there is no arguing this fact. Rezolve is by far the most undervalued AI stock on the markets today. You cannot find another AI stock on the markets trading at the valuation that Rezolve is trading at. It is not possible. I've looked, and I continue to look. Rezolve announced earnings on October 1st. They set a target of 500 million for ARR by the end of next year. What happened? Well, the stock actually rallied on that news. The stock went up 2%, then the stock went up 24%, then the stock went up 8%. What happened ever since was really China-related, trade. Markets got a little weak. The short report beat the stock up a bit before earnings, so that's where you get the decline here from $8.45 down to the low point of the $4 range. But Rezolve, at a roughly $1.7 billion market cap, is trading at about 3 times sales. There's no other company that is trading out there at 3 times sales for 2026. Even if you look at a company like Apple, it's trading far higher than that. Now, Apple's a profitable company. There's differences, right, when you're looking at price to sales in unprofitable companies and profitable companies. But Rezolve is the cheapest AI stock on the marketplace. Okay, now Rezolve did outperform a bit today versus the markets. Rezolve, at the time of recording this video, is up about 2%. S&P is up 0.25%. But a lot of other stocks are not doing so great today. Okay, so Rezolve is a clear outperformer. Even when you look at, I guess the Russell in general was up 1.64% today. So that's good, mainly on comments from Jerome Powell. But Rezolve definitely had some strength today, even on relatively low volume. The stock is only at 10.67 million in volume today. Now, as I've talked about before on this channel, what really takes Rezolve to the next level is when it gets some exposure. Part of the reason why Rezolve is the cheapest AI stock on the markets today is because people just don't know about it. People just don't know about Rezolve. That's one of the key issues with the valuation of this company. As more people learn about the company, as more people, invest in the company, I am not expecting the stock to remain this cheap. Based on some of the work I've done, a 10 times price to sales is really bare minimum valuation for this company. That is a $5 billion market cap at some point over the next 3 months as we head into 2026. Divide that by $1.7 billion, and that's 2.94x higher than where the stock is today. That puts a reasonable fair value of the company today at $16.35. That does not mean overvalued. That means a reasonable fair valuation at $16.35. Now, this is probably why Citadel bought $100 million worth of stock at $6.67 per share, about $1.10 higher than where the stock is currently trading at. Citadel felt confident buying at those prices, let alone the stock $1.10 cheaper today than where Citadel just bought a stake in the company. The problem is people just don't know about Rezolve. That's the biggest problem and reason why the valuation is so cheap. The other reason is some people get a little nervous that Dan Wagner's the CEO and that he had a failed company in 2016, okay, called Power Technologies, right? So that makes some people a little bit nervous. You obviously had the short reports that came out, and that dampened sentiment a bit. but I believe Rezolve will be back with a vengeance. Something else I will also point out is Rezolve typically does a lot of press releases. They did not do a press release today, so that's good. Okay, I love that Rezolve does a lot of press releases, but not everyone does. Not everyone is in love with press releases. Okay. And Wall Street kind of looks at it as, why are you doing so many press releases? Do you just want the stock as high as possible? So to some degree, the company not doing any press releases today is actually a good thing and could be part of the outperformance that we've seen. Now, in the news today, in option activity, we have 4 different trades totaling $640.3 thousand. 0% positive order value. You can see that they are all for the same expiration and same strike. Probably one firm that wants to hedge a position. These are all for January 15th, 2026, so relatively short term, and they are the $14 puts. The price is around $890. So let's do a little bit of math on that, okay? Just so we get the numbers right. $14 strike minus, let's call it $8.95, puts the break even at $5.05. So it would appear that someone is making a bet that Rezolve goes back below $5.05 before January 16th. Now, this is not a high conviction trade, I'll tell you that, because it's a $14 put. So they're basically betting the stock just doesn't rip higher between now and January. It's one trade or a couple trades, less than $1 million. It doesn't mean a whole lot, but I do like to point these out because these are big trades, right? So take that for what you will. I would bet against that. I think the stock is moving higher into year end, personally, as long as the whole China trade situation does not get worse. And it might be a hedge on that. Since Rezolve has such a high beta, if the markets fall, Rezolve falls a lot more, right? So I think it's probably kind of a larger macro trade versus like they're just bearish on Rezolve. Does that make sense? It's kind of like how hedge funds will short Tesla to short the S&P because Tesla's going to fall a lot more than the S&P if stocks fall. If the S&P falls, Tesla's going to fall more. It's a good way to hedge. Same, I think, is true with that trade in Rezolve. Rezolve, high beta. It's probably got a beta of like 4 or 5. It does like 4 or 5 times what the S&P does. Okay, I would just guesstimate. Now, here on the day today, you have 4.11 million shares that are being covered on. So that looks good. Short interest of free float was last estimated at 10.35%. Today, it's estimated at 9.11%. So if hedge funds and institutions were really bearish on the stock, the short interest would be a lot higher than where it is today. Hedge funds and institutions, they might say they're bearish on the company. Grizzly Research and Fuzzy Panda and some of the short reports, but you are not seeing that reflected in the numbers. Again, I'll circle back to what I just said. The biggest reason why Rezolve is $5 and not $15 today is because it doesn't have a lot of coverage, right? From an analyst perspective, you only have a handful of analysts, like B-tier analyst, I would say. You don't have the JP Morgan's or Morgan Stanley's or Wells Fargo's or Citi or Bank of America analysts covering the stock at all. It doesn't get a lot of coverage, if any, on CNBC. It's been talked about once. So it's kind of at this point flying under the radar. But I think the time will come again where Rezolve is the hottest AI stock on Wall Street. And seemingly it's going to look like it came out of nowhere. Right? People are going to be like, oh my gosh, why is the valuation so cheap? Now, I will also say, ever since the short reports came out, sentiment has flip-flopped dramatically. So sentiment is now in bearish territory. Okay? You can see sentiment is at 29. Yesterday it was at 30. Message volume is low at 31. Participation ratio is high at 78. This is exactly what you want to see if you are long in Rezolve. Okay? You want to see people that are bearish on the company. Okay? I know it sounds crazy to hear that, but you want to see people that are bearish on Rezolve, especially retail investors, because retail investors are going to flip-flop so fast, it's ridiculous. They're going to jump back into the stock once it starts to get a little bit more attention. Now, I think, honestly, you might be one large contract away from getting a lot more attention as well. If Rezolve can come out and say, hey, we have a contract with Target or Dollar General or whatever the company is, that's a really large contract, that's going to get people excited as well. So I think into year end, you're looking at least a $15 stock. If the markets really get euphoric, the stock could be as high as $30 per share by the end of this year. You're talking a significant rally. Now, if Nvidia takes a stake in the company, or someone else, and that raises attention and awareness to the company, again, maybe you get there a little bit faster. But I think that's the destination and direction that we're headed in. Next year is a wild card. Anywhere from $30 to $100 as far as the work I've done is possible. And look, I'm bullish on the company. I put my money where my mouth is. Okay, I have 13,000 shares in this portfolio. Average cost $3.10 a share, worth $72,605. Currently up 80%, up $32,252. Invested in the company for 116 days. Okay, I think the best is yet to come. In this portfolio, I have 14,000 shares, market value of $78,400, currently up $37,000, or about 89%. I still have the Rezolve 250 calls, 15 of them, market value about $4,900, and total return 210%, or up $3,300. I also have 1,000 shares in Webull and 1,300 shares in Thinkorswim, plus the 1,500 shares via this option exposure, plus 14,000 shares here, plus 13,000 shares in the public account. That is total exposure at 30,800 shares times $5.60 as the current price of the stock. We're looking at total exposure here of $172,000. If I'm right on Rezolve, it's going to turn into a multi-million-dollar position. If I'm wrong, it's going to be a six-figure plus loss. I do not think I'm wrong. Could I be wrong? Yes. Am I prepared to be wrong? Yes. That's the risk I'm taking. But Rezolve is the cheapest AI stock out there, growing from 150 million in ARR this year to the end of next year at 500 million in ARR. It's like 200% growth, more than that. And the stock is trading at 3 times sales. It's dirt cheap. So that's a quick little update on Rezolve. Let me know your thoughts on this down below in the comment section. What is your position in Rezolve? What is your modeling tell you about where the stock is going into the end of the year or next year? Like, what is your expectation for Rezolve? Okay, let me know that down below in the comment section. Again, if you want to come join the trading community, check that out. Link down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.